All right, good evening, everyone. Futures Barizio here. It is 7:15 p.m. on Thursday, March 27th. Hope everybody had a great day. And just jumping in here to do a live stream. So if you are watching it live, make sure you wave hello, ask questions if you have any. Appreciate it. And if not, if you're seeing this on the YouTube channel afterwards, recorded, of course, make sure you smash that like button, subscribe to the channel, and drop any questions or comments down below the description. And I appreciate it. I do read and reply to all comments unless they're spam, in which case I delete them. And I do get a decent number of those. So anyways, we'll just jump right in. So I made a video last night about using currency divergence to potentially look for trade. So a couple of things about that. I'm not going to rehash the whole thing. You can go back and watch the video from last night or the one I made previously. So it's important to note that I always look at the spot Forex charts, the actual chart that you're trading on, the currency pair, whether in this case it'd be the dollar yen, euro dollar, or the euro yen, because I have three indexes up here. So that's three currency pairs you can create out of that. Right, the Euro USD, the USD Yen, and the Euro Yen. Okay, and again, like I also said last night, you can use this on any time frame, any currency indexes you want. TradingView has all the 8 major currency indexes available. If you use TradingView, basically how you do that, if you go to the search feature. So in TradingView, if you look over on the right, my mouse up here at the plus sign where it says add symbol, and you go to indices and you just type in, you can, if you want, the DXY is the dollar index. That's very popular. So it lists the Swiss franc is SXY, the Japanese yen is JPY. Okay. JPY. All right, the Canadian dollar is CXY. Okay, you kind of get the point. An odd one is the New Zealand dollar. Well, I guess it's for Zealand, is ZXY. The Australian dollar is AXY, etc. Okay, so you get the point. And you can add those to your watch list, whichever ones that you actually like to trade. If you have a favorite currency pair or pairs, you can add those to your watch list and split your screen into at least two, because you're obviously going to follow at least one currency pair, which is 2 currency indexes. And again, from TradingView, you come up here and you click this layout. So if you're only going to have 2, you can either use this one, which puts them on top of each other, or this one, which puts them side by side, which is what I prefer. And you can see this one's lit up for me because I have 3, so I have 3 side by side. Or again, you could put them in any format you want. You can see they have all different choices. I just like the side by side. Okay, so you can do that kind of thing. This one right here, or one of these 4 right here, I think would be good if you're only watching one pair. So you can see in this you have like the bigger window and then the 2 smaller windows. So what you could do here is have the actual currency pair in the big window, and have the 2 indices that make up that pair in the smaller window. So that's an idea if you're only trading one pair. So again, you have the currency pair and then the 2 indices that make it up. But I think if you're trading more than that, I wouldn't go crazy, because you don't really want to be watching 8 currency indexes on the screen at once. You're just going to get confused, and it's just going to be too much. So I would recommend picking no more than 2 currency pairs, which be up to 4 indexes. Well, no, not really. Well, it could be. So no more than 2 currency pairs, okay? However many indexes it takes to make up those 2 currencies. Maybe 2 to 3 currency pairs, because I can get 3 currency pairs out of these 3. You just don't want to go crazy having lots of indexes on your screen. It's going to be too confusing. even for me, this is about all I can handle. Okay. Now it also depends what time frame you're using too. I'm using the 4 hour for my analysis time frame, and so I can be a little bit more generous with what I'm following, although I don't, because I'm only using a 4 hour time frame, and so it's not like this really changes all that much during the day. You only get 6 candles a day. That in any 24-hour period, you're only getting 6 candles that draw. So it's not like you're on a 5-minute chart and you're just constantly having to look at it. Okay. And again, you can do this on any time frame, any pair. But again, also if you go to shorter time frames, just be prepared for more noise, more potential false signals. All right. So a couple of other things about these charts I just want to point out. I've been playing back and forth with how I want them to display. I've tried using regular candlesticks. I've tried using line charts or some combination thereof. So what you're seeing on the screen now is Heikin-Ashi charts. The issue is sometimes with these currency indexes outside of maybe the US dollar, because the US dollar is watched so closely, is that you get a lot of gaps on the chart. Even on some of the higher time frames, you get a lot of gaps on the chart if you use candles. And so I decided to use Heikin-Ashi at least for the initial analysis. Heikin-Ashi, I'm not going to get into a whole lesson, but Heikin-Ashi basically just takes the average of the last couple of candles and displays the next one. And so Heikin-Ashi actually means average something in Japanese, I forget. But it does smooth out the chart quite a bit and takes a lot of the noise out. There are disadvantages to Heikin-Ashi because it's only taking an average. You're not seeing the actual total range of that candle until it closes. But in terms of looking for setups, you're just looking for visual cues on the chart, and Heikin-Ashi is perfectly fine for that. If it comes time to actually to take a trade, then either way, I'm going to go over to the actual currency pair chart and just confirm what I see, or I can switch these very quickly in TradingView over to candlesticks, to regular candlesticks. And again, in TradingView, you just go right here in the middle where you see this little candle symbol, and you click that, and Heikin-Ashi's down here. And I believe Heikin-Ashi is included even on the free program, but I'm not 100% sure. But obviously, I can switch it to candles or bars or line charts, whatever else I want. But I just like the Heikin-Ashi for this. So that's what you're seeing, Heikin-Ashi charts. Okay. The other two things I've put on the screen is, which I already talked about. One is the 10-period simple moving average. That's this yellow line that you see here is the 10 SMA. And I also added a 54-period SMA just for the overall trend. Okay, now I know a lot of people like to use higher moving averages like 100-period or 200-period. I don't like going that high, especially the 200-period. I know it's very popular. A lot of people talk about it like, oh, you got to have the 200-period on there for the overall trend. The problem is with the 200-period, in my opinion, is that, especially if you're on higher time frames, by the time that there's a crossover and that moving average flips the LOA, where price starts trading from above it to underneath it or vice versa, price has probably gone a long, long way. And I think the 54 period is better. But you have to play around with it, okay? And I also think it depends what time frame you're using. For the 4-hour for the 4-hour chart, which is kind of my preferred analysis chart, I do like the 54 period. And why 54? 54 is actually a Fibonacci number. You can make it a 50 if you want. It doesn't really make much difference. But if you look at a Fibonacci sequence, 54 is actually a Fibonacci number. And so just for the sake of whatever magic there is in Fibonacci, I just make it a Fibonacci number. Okay, but you can make it a 50 or whatever. And you can use a different type of moving average. You can use an EMA if you want, whatever you want. Okay. But again, so those are the two, and that's the blue. The 54 SMA is the blue indicator that you see there on the chart. Okay. And the reason why is because you definitely want to try to take trades in the direction of the trend. I know I talked about just, looking for divergence where one index crosses, say, under the 10 period and the other one crosses over at the same time. and then that's the divergence. And once you get, a push back, let's say this one going up, and it comes down, and then once you get it flipping back to the upside again, so this one's long, and then you want to look for one that's, potentially short. If you come over to the dollar, like maybe this one that popped up and then went down. Okay, now, that's fine, but you also want to try to look for ones where the longer trend is also divergent too. And in this case, let's see, for this one, this probably would not have been a great trade because, well, actually, yeah, this one probably would have been okay. But actually, in the end, it probably wouldn't have worked out because you can see over at the dollar index, we pulled back over the 10, went down, but that same area on the Japanese yen was right here, okay, and that also went down for that same period. So, and by the time we got a turn on the yen, we also had the dollar index going up at that point. And so that one probably you wouldn't have taken anyways, because at the time when you got the signal, they were actually both trending down. You can see where the vertical dash line is on the left-hand chart and the middle chart. They're both pointing down. Okay. Yes, the Japanese yen is over the 54 period, but they're both trending down at the moment. Okay, so you just want that divergence where you've got one. Let's see if we can find one again. I know I did this last night. Here's one right here. Okay, so you've got the dollar index trading down. Okay, price then closes, runs above the moving average, the 10 period SMA, and at the same time, over in the middle chart, we've got the Japanese yen closing underneath the 10 period SMA and above the 54 period. Now, this one's not great because the 54 period on the dollar index has been violated too. So maybe you wouldn't have taken this one either. So it'd be helpful if I could show you one that actually worked out here. Okay, because this is what I mean. Okay, so here's one right here. So we've got the dollar index trading down. Okay, it breaks above the 10 period here, but wicks out over the 54 period here, and then over here on the yen, this is the same time period. We're above the 54, so we're in an uptrend. We come down, we break the 10 period, we come down, test the 54, but we really don't close below it, and then we have this big move up. So this would be obviously a great place to go short the US dollar yen. Okay, so that's the reason why I'm using the 54 period moving average. It's not magic, and sometimes, honestly, it's going to give you a false signal. So I've debated one way or another about even using the longer moving average. I do like using the 10 period because I want to see the price pull above or below it, depending which direction that index is going in. But I feel sometimes using the longer moving average can give you a false signal. So I'm still kind of working that out. But anyways, if you need help to identify the trend, you can use a longer moving average. You just have to experiment with what works based on what indices you're trading and what time frame, okay, that you want to operate on. Again, I'm operating off the 4-hour for my analysis. And then once I find a potential setup, then I'll go over to the actual currency chart, currency pair, and look for my setup. Okay, so let's just talk about where we are right now. And again, I've got some arrows drawn here. And again, I'm not guaranteeing this is what's going to happen, but just looking at, what's happening right now. If we look at the dollar, we essentially have the dollar index now trading back above the 54 period and made this bend right here. Okay, and this is where potentially, this could be wrong and this could roll over and keep going down. But we did have a break of structure here. If you want to just talk about market structure, we did break structure here. This last swing high before this move down. We've now come up and taken out this area. So from a pure market market structure standpoint, we did break that. So that's what I'm going with until it proves otherwise. Okay, and you can see we're also making higher highs and higher lows going above the 54 period. So currently right now we had price, not the current 4-hour candle, but the last one this afternoon during the New York session, pulled down below the 10 period, still above the 54. So this is a bullish setup, right? Because we expect this index to continue to run up. At the same time, going over to the yen and the euro, we have them both trading under the 54. Now, there's no pullback on the yen right now. I have this drawn in here, imagining a potential pullback like we had here or over here. So I'm imagining some kind of pullback, which we may or may not get, before the next trading day. But, so if we don't, then, I won't be trading against the yen, okay, because we don't have a setup, okay. However, when we go look at the euro was trading above the 54. It is now broken below. It's come back and retested it from the bottom. And so if this holds, then we'd be looking at the euro going down and the dollar going up, so we can potentially trade the euro USD short, okay? Because we have the euro potentially going down, the US dollar index potentially going back up. Obviously, you trade the euro against the USD, so that would be euro USD short, okay? So let's now go and look at the euro USD Forex chart, which is right here. And I'm going to jump to the daily chart first. So we did have price going down, okay? Now, this is what I'm saying about time frame, because overall this looks pretty bullish right now, right? And so I am aware of that. However, this is the daily chart, okay? And so we had market structure break, okay? We had this swing low here. It came up. We broke market structure, which was the last high that was put in on the last swing low was put in right here. Okay, well, I guess I can zoom in. Okay, we had this low led to this high, although there was no market structure break technically, so that's really not a good example. But clearly we have a break of structure here on this daily chart. Okay, so what I did was, and again, I'm not a huge Fibonacci person, but I took a fib drawing from this low down here, which led all the way up to here. Okay, and I marked off with little price tags the 50%, the 61, and the 78.6 fib levels. That's where these little orange tags line up with. So I don't need to keep the fib on the chart. I just know this is 50, 61.8, 78.6. So what I anticipate is for this pair to continue down, okay, to at least to the 50, if and maybe lower. Maybe it comes all the way back to this previous resistance, which is now acting as support. If you are a ICT trader or whatever, smart money, then potentially there's fair value gaps in here somewhere. I'm not really sure if it does come down, how far it's going to go. But, the 50% would be a minimum target, which that's about, from where it is right now, even if it comes back just to there, that's about 144 pips. And if it goes lower than that, it comes down to the 61.8. That's a little over 200 pips. And if it comes down to the 78.6, that's over 300 pips. So I'm not sure where it's going to come down. And if we drill down a little bit lower time frame, let's get rid of this line I just drew on the daily. You can see here we are trending down. I do have kind of these two zones marked out. Price needs to hold, below one or both of these two zones for that downtrend to continue. Here is that break of structure area, that line I drew on the daily chart. So this is that big move down. The 300 pips is all the way down to this, or 272 pips down to this line. There's the 144 on the 50% level. Even though they look a little weird on this chart, they're still at the same price, so that's fine. And then the 200 on the 61.8, and then the 300 on the 78.6. Although I don't think it'll get that far. I think if it does come down, it won't get any further than this support level here. But these are three potential trade management zones. So it does look pretty bearish on the actual Euro USD chart right now. And again, as long as these areas hold, I mean, we could see a spike up. We could see a stop run up here during the London session. Obviously, we're in the Asian session. I don't expect it to do anything overnight. But very typically during the London session, we will get, a push higher, stop run, liquidity grab above this high, or maybe even up to this one. And as long as price doesn't, we don't get a substantial close over these highs, I think the downtrend would still be intact. Personally, I wouldn't want it to go any higher than this one, but we'll see. Okay, if that's going to hold. And, everything's an if, no guarantees. But of those three that I just showed you on the indexes, that is to me, is the best setup right now. If the Japanese yen, pulls back overnight, I mean, it's 7:30 New York time, so, you'd have to get at least 3 candles, which would take us into the New York session probably tomorrow morning. I don't know if that's going to happen. If it doesn't, then I won't be trading the Japanese yen in any of these. I would only be looking to trade, like I just said, the Euro USD based on the way it looks right now. Okay. If we just go and look at the other two pairs, the Euro Yen, you can see it's kind of trading sideways. It's really been in a range on the daily chart essentially since, well, this is a daily chart. This goes back to last August. We've basically been ranging, all inside here, especially to the downside. It's a very clear support level to the downside. It's a little bit more wacky here on the upside, depending where you draw this. We did have it breach a couple of times, although both times it did come back into the zone. So we've essentially been trading sideways. And of course, that makes sense if you look at these two indices, because right now, other than this move up on the euro, these indices really were both kind of moving down. And so actually they were moving up at the same time. All right, they were moving up at the same time, and now they look like they're going to go down at the same time. So that, is probably why, you'd have to go and look at these indices on a longer time frame. But that's probably why it's been trading sideways, because they've both been essentially moving in the same direction. So yes, you're still going to get movements. This is a daily chart. There's still a lot here, but there's no real trend. There's trends on shorter time frames, but there's no real overall trend here to play. So this would really be a range type thing, which I don't personally like to do. Okay, and we just look quickly at the US dollar yen, jump to the daily chart. Okay, we have this structure level right here that led to this low, and now you can see we're right back up to it. So this is kind of at a critical point, and you can see this area right here has been very important. We can see we've had multiple touches in the past on this zone as resistance. We had support, we had resistance here, we had support, we had resistance, and now potentially resistance again. So we'll see what happens with the US dollar yen. This one I'm not particularly interested in. By looking at the indices, potentially we could be looking for US yen, dollar yen longs. If this uptrend continues on this index and we do get that pullback and then reversal lower, then that would set us up for US dollar yen longs. But I think, we would have to clear this area first, take out this zone right here, get a nice break above here, and then potentially we could start moving higher and, reaching for some other liquidity like up here, and then of course probably further back up towards these levels if we get through here. So, but one thing at a time, we have to make sure that we're trading in the right direction. And so that is what it looks like. So again, guys, to review, you can use any time frame, any indices. If you have a favorite currency pair or 2 or 3, feel free to put those all on the chart. Because 2 out of the 3 of the pairs I'm following here have the US dollar, It only requires me to have 3 indices because of the combinations I can make up. But again, I would not recommend that you look at more than 3 indices at once. It's just going to be too much. Unless you're going to use a really high time frame. If you're going to use a 4-hour or a daily time frame and you're going to just like really swing trade or position trade these, then maybe you can get away with a little bit more. But, you know, I wouldn't look at it like, you know, the more I look at, the more potential trades I get. Yes, that is possible, but you're also going to get, you know, a lot of analysis paralysis, and it's going to just be tough on your eyes to really make good decisions. So I would try to keep it to a few indices. I'm just really getting back into using this, so I'm going to keep it at these for now. If I decide to stay with this more long term, I might add maybe one more. You know, maybe I'll add the pound or the Canadian dollar, or, you know, or the Australian dollar or something. I'll maybe add one more to this mix. But for now, I think 3 is plenty. It's 3 currency pairs. And although 2 of them are yen pairs and 2 of them are dollar pairs, you know, it has 3 different currencies in there. And so I think there's opportunity there. If I got to the point where on the longer time frame all of these were trending in the same direction, then maybe I would mix it up at that point and throw another one in there, just, you know, to have one going the other way, so I at least look for opportunities. Because it might be at some point all 3 of these are moving in the same direction, and, you know, everything goes into a range. So that's definitely possible, but right now that's not the case. So just be careful on your selection. Don't overdo it, because there is a lot here. Okay. All right, so that's it for Forex. Just a brief run over to the futures market. For now, I took natural gas off my board because natural gas is really choppy right now, and I just took it off my watch list. I may go back to it at some point. So right now, I just have oil, copper, and the DAX. And the DAX is really a mess right now too. But I do like to keep one stock index on here, and I actually prefer the DAX over the NASDAQ or the Dow or the S&P. So it just tends to trend cleaner when it does trend, although right now it's not trending really at all. Okay, so quick look at oil. So I am long oil. This is the 4-hour chart. I see I have a very late entry here. But I do think this will push up, and I'm targeting this next liquidity pool up here at these highs. Okay, I do think this has a pretty bearish, bullish pattern right now, and we did come up and, you know, on this high right here, kind of looks, you know, like this high, these highs over here, and price pulled back. But you can see, you know, after the pullback, it made this high, it pulled back below the 10-period moving average. And you can see we've had 1, 2, 3, 4 bullish candles in a row. So I do expect that we'll see a little pullback here, but that eventually it will push higher and break through this resistance, which is kind of like a retail. I call this like retail, where you've got multiple resistance levels. Whoops, shoot, I didn't want to do that. Put that back. Where we've got, you know, multiple resistance levels. You know, retail levels, right? 1, 2, 3 touches at this resistance level. Those equal highs is usually, you know, an area of manipulation. And so when the price came up here, the sellers tried to jump in. It did pull back into this zone and went up again. We'll see if that maintains. But again, I'm holding a bullish bias, at least up to this next liquidity zone up this way. Okay, copper. Copper is not looking particularly strong at the moment. We have been in a very strong bullish run, as you can see here. We ran up here, made this new high, pulled back, and then we tried to go up again on this candle. Right? We put in this, we broke below the 10-period SMA right here, tried to run up again. That failed, and failed badly. I mean, we had this huge bearish engulfing candle that came down. Now, we are sitting near major structure areas. We have one level here, and we've got another one back here. Okay. this is actually the one that led to the break of structure off this low. Okay, and so, and then this low led to this high. So I basically, anything that, any hold of price between these zones, between these two red lines, basically keeps my bullish bias in place, and that this is just a big fat pullback. But we did put in a higher low, a lower high right here, and then down. So if we get a pullback here, let's say on the 4-hour chart we get a pullback, back up to here. Let's just say, and the moving average comes down, and we get some price action above there. I could see taking a short, even if it's just like down to this area or maybe down to here, something like that. And then that would be it. I'd probably just look to target this area and then get out of the trade if it gets down there, just because we do have major structure sitting here. That price is probably going to react to, and then just see what happens. Do we get the resumption of the uptrend, or do we break through here? And then if we break through, then we could have a substantially bigger down move. But we don't have that right now. Okay, and then lastly on the DAX is what I was talking about on DAX. You can see DAX is really messy right now. This is the 4-hour chart. You can see we've got some major structure areas sitting here. It's a little hard to know exactly, but pretty much right in here is where we've got all these equal lows that we might see manipulation from. Although again, like I just said before, these equal lows can definitely be a retail trap. When people think that price is going to come down here, hit this area, and then bounce and go higher. And in a few cases it did, but there's no guarantee that it's going to do that again. So let's see what happens. I won't be doing anything. I mean, I suppose maybe I could be looking for a short from about where price is now. Maybe if it gets a little higher and then roll over and come down and tag this area again, I might be interested in a potential short, maybe back to this area here, but then that would be about it. I would not shoot for anything more than that until we clear all of this. We'd have to really actually take out this low way over here, which is kind of like the low over this whole range. If we get a break below this low over here, at that point I might be interested in a longer term short on pullback. But as long as it's in this range, if I trade it, I'm going to be very conservative on my profit targets, just because I really don't like sideways price action like this, and we've been sideways essentially since about the middle of February. So about 5 weeks now we've been moving sideways, and so it's not anything I'm interested in beyond small targets. So again, short-term bearish on the DAX for sure, but long-term unclear to me. Okay, copper again, short-term bearish, longer-term unclear, and on oil, short to medium-term bullish until we move up to the next liquidity area, and then we'll see what happens after that. Okay, assuming that these hold, but we are making steady progress up. So as long as these highs hold and we keep moving, then I suppose we would shoot up to this liquidity pool up here. But we'll see if this current up leg holds. It does look pretty good right now, but we'll see. All right. So yeah, that's about it, guys. That's my wrap and analysis. So again, for Forex, looking for a potential Euro USD short tomorrow, and on these futures markets, I'm going to hold this oil long, and then potentially look for some short-term selling opportunities in the DAX and copper potentially. Okay. All right, guys. So I'm going to leave it there, wrap it up. Hope it was helpful. Again, smash that like button, subscribe to the channel. Questions or comments, leave them down below, and we'll talk to everybody soon. Okay, thanks.